Hey guys, this is Ryan with TrendLizard.com. I'm going to take a look at another ETF here by request from one of our subscribers, Armando. Thank you very much for the request. We're going to take a look at XBI. This is the Spider's S&P Biotech ETF. So this just is basically a basket of biotechnology stocks, and it shows obviously where it has gone over time. So we have looked at this one for you again. We will update it. It's been very volatile lately, so I'm not surprised that you want to take a look at it again to see what's going on. And obviously what we're doing here is applying the Elliott wave theory to identify where XBI is going to go in the future. So the tricky thing about XBI is that we also follow a biotech ETF that is not XBI, but it's obviously very similar. However, there's some very notable differences between the long-term chart on XBI and the long-term chart on the ETF that we follow, and that is IBB, which we'll look at in a moment here. But as you can see on XBI, what I see here fairly clearly is off the 2009 low, when just about everything in the market put in a low, is a large five-wave advance. Wave 1, Wave 2, Wave 3, Wave 4, and Wave 5. As you can see here, this advance off the 2016 low on XBI moved to a new high. In fact, if you look at this high here, it was at about 90. This high here was over 100. So more than 10% this leg moved above the high of this leg. So that's an interesting difference. Another interesting difference is how far this pullback went and the look of this pullback, and I'll show you what I mean here. Here's what looks like a five-wave advance that may just now have completed in 2018. Here's a look at IBB, the ETF that I look at here. So this is the advance off the 2009 low. Pretty sharp, pretty strong. Looks like the fifth wave advance actually completed in 2015. We had a large pullback at that time. You can see the up leg that's played out off the 2016 low did not set a new high. In fact, it was well short of the high that was set back in 2015, giving me the impression that again that the bull market ended in 2015 on IBB, the ETF that we track for biotech, and that a larger pullback has been playing out since then. So if we take a closer look at IBB here, you can see a couple more differences. One, the pullback in 2018 came fairly close to the low in 2016 before it's reversed more recently. Another interesting difference is the down leg itself on IBB. It looks like a three-wave down move. And when we look at it on XBI, it does not necessarily look like a three-wave down move. So all of this to say it's a little bit confusing why we're looking at two things that are seeking to do the same thing, and yet they're telling us two very different stories. So that immediately makes me a little less confident in what's going on XBI. So I want to use that as a disclaimer to say, not 100% confident, and we need more proof before we do anything aggressive with XBI as a result of that. So let's get back to XBI. Again, it looks like a five-wave advance has played out fairly clearly after 2009 low. It lost quite a chunk of its value. It went from about 100 down to 65 over the course of less than half a year before it's reversed and turned higher. But like I said, the difference here, if you recall on IBB, the low for this pullback was pretty close to the low in 2016 on IBB, and the down leg was very clearly a three-wave move on IBB, not so much here. So if we zoom in and look at what's going on here, there's two different ways we could label the actual decline that's played out off of the 2018 high, which is its all-time high. One way we can do it, we can label it as a five-wave, as a five-wave trendy down leg. It's pretty obvious, pretty clear that we can do that. It's not hard to do that at all. We could also label it as a three-wave move. It's not clear. So that just adds to the lack of clarity that's going on with XBI right here. So it's pretty hard to say exactly if a larger pullback has begun. Something like this would be just the first leg of a larger down wave. If the first leg of a new move is a five-wave decline, it tells us it's not going to be the only move. It would only be the first leg of an even larger move. So if it is a five-wave decline, it tells us that after this recovery completes, we're going to get another five-wave decline. If instead it's a three-wave move, that could be the end of it. Price could reverse higher from here. So that's the variability. What we would have to see for XBI to look bullish to us. First thing we would want to see is a move above this yellow resistance area here. So it needs to move to say 88, just to give it a little bit of a space there. That would be a good indication that this decline off of August high was not the first down leg of a larger downtrend. If it can move above 88, that would be a good sign. The other thing we want to see, and if we zoom in and look at the recovery that's going on right now, is to see this recovery turn into a trendy move and to be followed by a small counter trend pullback that stays above 71. So if we can get trendy upside movement and some proof that this pullback was a counter trend three-wave move, then we have something to work with. Right now, I just don't see it as a buying opportunity. It could be in the middle of a larger downtrend, a lot of different things. And so I think we need some work here on the chart before it becomes a good buying opportunity. And again, that would take first for XBI to stay above 71, for this up move off of December's low to prove trendy, and also to see a move above this yellow resistance area, which is essentially a 61.8% retracement of this down leg here. If we want to see more than a 61.8% retracement to indicate, again, that this is a buying opportunity. Until we see those things, stay away. It's not clear. It doesn't line up with our the other biotech ETF that we track, and therefore I wouldn't waste my time with it unless we see those bullish indications take place. So I hope that's helpful. Sorry, a little bit long and a little bit convoluted, but that is exactly how I feel when I look at this chart too. It's not a clear buy to me at this time, despite the massive recovery that's taken place so far. We just need a little bit more information to prove that an important low is in and that something more bearish is not taking place. So I hope that's helpful. This is Ryan with TrendLizard.com. We're working on this stuff every day, applying Elliott wave theory to every corner of the market to make sure you're making good investments at all times. So come visit us, come get a free trial, and we'll talk to you soon. Have a great day.